Economic analysis of Argentina before and after Javier Milei. Argentina's economy has long been characterized by cycles of growth and crisis, driven by structural challenges such as inflation, currency instability, and a heavy reliance on exports. The election of Javier Milei, a libertarian economist, has signaled a radical shift in economic policy. Below is an analysis of the country's economic situation before and after Milei's leadership, with a focus on liberalization and the role of oil and gas production. Before Milei, a crisis-prone economy. Key characteristics: chronic inflation. Inflation rates exceeded 100% annually by 2023, eroding purchasing power and creating economic instability. The central bank frequently printed money to finance fiscal deficits, fueling hyperinflation. Fiscal deficits and debt. High levels of public spending, including subsidies and social programs, led to unsustainable fiscal deficits. External debt grew significantly, with periodic defaults undermining investor confidence. Currency controls. Strict foreign exchange controls limited the free flow of capital, leading to a thriving black market for U.S. dollars. The peso depreciated significantly, making imports more expensive and exacerbating inflation. Protectionism. Import restrictions and high tariffs aimed to protect domestic industries but stifled competitiveness and innovation. Export taxes, particularly on agriculture, discouraged production and investment. Energy sector challenges. Argentina's vast oil and gas reserves, particularly in the Vaca Muerta shale formation, were underdeveloped due to regulatory hurdles and insufficient investment. The energy sector suffered from price controls and subsidies, which discouraged private sector participation. After Milei, a radical shift toward liberalization. Milei's economic philosophy centers on libertarian principles, including minimal government intervention, free markets, and deregulation. Key reforms proposed or implemented include: 1. Monetary reform. Dollarization. Milei plans to eliminate the peso and adopt the U.S. dollar as Argentina's currency to curb inflation and restore stability. Abolishing the central bank. He advocates dismantling the central bank, which he blames for hyperinflation and economic mismanagement. 2. Fiscal austerity. Drastic cuts in public spending, including subsidies and social programs, to reduce fiscal deficits. Privatization of state-owned enterprises to improve efficiency and reduce government liabilities. 3. Deregulation and trade liberalization. Removal of currency controls to attract foreign investment and restore confidence in the financial system. Reduction of tariffs and export taxes to encourage trade and integrate Argentina into global markets. 4. Oil and gas sector development. Vaca Muerta. A renewed focus on exploiting the massive shale reserves in Vaca Muerta, one of the world's largest unconventional oil and gas deposits. Deregulation to attract foreign investment. Partnerships with international energy companies to expand production capacity. Energy exports. Transforming Argentina into a net energy exporter, particularly to neighboring countries and global markets. Infrastructure investment. Building pipelines and export terminals to support increased production. 5. Labor market reforms. Reducing labor protections to make hiring and firing easier, aiming to increase employment and attract investment. Promoting entrepreneurship by cutting red tape and simplifying business regulations. Impact of liberalization and energy focus. Short-term pain. Social unrest. Austerity measures, subsidy cuts, and deregulation could lead to widespread protests and resistance from unions and vulnerable populations. Economic contraction. Initial reforms may trigger a recession as the economy adjusts to a freer market. Medium to long-term gains. Inflation control. Dollarization and fiscal discipline are expected to stabilize prices and restore confidence. Investment boom. Deregulation and a more business-friendly environment could attract significant foreign direct investment, particularly in energy and infrastructure. Energy exports. Increased production from Vaca Muerta could make Argentina a regional energy powerhouse, boosting export revenues and reducing the trade deficit. Geopolitical implications. Energy independence. Expanded oil and gas production could reduce reliance on imports and strengthen Argentina's bargaining power in regional trade. Global markets. Argentina could emerge as a key player in the global energy market, especially in natural gas exports. Conclusion: Javier Milei's reforms represent a bold attempt to reverse decades of economic mismanagement. While the short-term challenges are significant, the focus on liberalization and the energy sector could transform Argentina's economy in the long run. Success will depend on the government's ability to manage social backlash, attract investment, and effectively leverage its natural resources. If executed well, Argentina could transition from a crisis-prone economy to a stable, growth-oriented market driven by energy exports and global integration.